And former Federal Reserve Chairman Alan Greenspan has died at 100 years old from complications from Parkinson's disease. Greenspan led the Fed from 1987 to 2006, overseeing a long economic expansion, at the time the longest in history, and becoming one of the most influential central bankers ever. His legacy was later clouded, though, by criticism that lax financial oversight helped set the stage for the 2008 financial crisis.
On this, let's bring in Michael McKee, Bloomberg's international economics and policy correspondent. Mike, as Matt mentioned, nearly 2 decades at the Fed and a legacy that was recast yet again in 2008. How do we view Alan Greenspan's legacy here in this year of 2026?
Well, I think you have to call him one of the most, if not the most consequential Fed chairs ever, because he presided for so long over so many different twists and turns in the economy. Shortly after he started in 1987, we had Black Monday and the big drop in the markets. He responded by offering the markets unlimited liquidity, which then became known as that Greenspan put that you had on the screen, the feeling that the Fed will always step in to save the markets. And that's certainly influenced the way that markets have traded and the way the Fed has acted. He presided over one of the longest expansions in U.S. history, in large part because he recognized early that productivity gains from the PC computer revolution would be able to hold down the rise of inflation. But then, as you mentioned, he did miss the housing crisis, dismissing warnings about it, saying that it wasn't going to have an effect, that higher mortgage rates were going to tamp it down. And so that has clouded his legacy in the years since.
I believe it was Ben Bernanke who coined the phrase "the Great Moderation," which I guess is the idea that we had lower inflation, faster growth, fewer recessions, less economic volatility, right, during, I guess, Greenspan's tenure. On the other hand, some people have called it the great leveraging, because it's like a spring that was coiled up and then just exploded with the financial crisis. And a lot of people point the finger at Greenspan for that.
Well, and don't forget, before the financial crisis, we had the dot-com meltdown. The markets over-leveraged themselves and went a little crazy there. Greenspan recognized that, but didn't do anything about it. He gave, in 1996, his famous irrational exuberance speech. I was there. We didn't realize what he was saying at the time. We didn't have cell phones then. I got home and my answering machine was ringing off the hook with people in Asia calling to ask, what did he say? What did he say? Markets quickly recovered and went on from there to new highs. And then in 2000, that bubble popped. So he had some blind spots as well as some very good economic observations that helped the economy grow.
Reflecting on Greenspan's communication style is an especially interesting journey right now, Mike, considering we're entering the era of Kevin Warsh as Fed chair, who again seems to want to change the way the Fed communicates. Greenspan, of course, was before the era of forward guidance. How has Greenspan and on really changed the way the Fed communicates to these markets and the public?
Well, he really changed everything because he was the first Fed chair to put out a statement explaining what the Fed had done at a meeting. In 1994, he announced that the Fed had raised interest rates and suggested that they might do so again, which led to a huge bond market sell-off. But it became the practice of the Fed to put out statements, and then gradually they expanded what they did to the minutes and to other programs that they announced and they talked about, and it became very much a transparent Fed, much more transparent than in the days when the book was written about them, Secrets from the Temple. So he was the precursor to what we see today. The other interesting aspect of what you said, Danny, is that Greenspan ran that committee. He was the last one to speak. He was the one who decided basically what the Fed was going to do. He had enormous influence. And ever since then, the Fed chairs have attempted to be much more diplomatic, much more inclusive, much less of a force. They try to develop consensus rather than tell people what they're going to do. It'll be interesting to see which model Kevin Warsh adopts.
Yeah, absolutely, especially considering he was essentially schooled, at least at the very beginning, by Alan Greenspan. Mike, thanks so much for joining us. Michael McKee, there, our international policy and economics correspondent, spent some time himself with Alan Greenspan, the maybe most influential Fed chair who led the central bank for nearly 2 decades, has died. He was 100 years old.